Welcome to today's accounting and finance quiz. I am Echela Okori, your accounting and finance coach. So let's dive straight into the questions. Question number 1, a multiple choice question. Which principle allows an accountant to ignore a specific accounting standard if the net impact of doing so is so small that it would not mislead a reader of the financial statement? A, going concern. B, conservatism. C, materiality. D, consistency. Yes. Do you know the correct answer? You know it? Which principle allows an accountant to ignore a specific accounting standard if the net impact of doing so is so small that it would not mislead a reader or a user of the financial statement? The correct answer is materiality. Yes, materiality. So if the impact on the account, or if the impact on the account is so small that it will make a difference, then we'll say that information is not material. Materiality is the ability of that information to influence decision. So if that information cannot sway the user of the account to the right or left, or to say yes or no, then it's not material. So that is a correct answer. Question number 2. The going concern assumption states that a business will A, be profitable every year. B, continue to operate for the foreseeable future. C, be liquidated and sold in the near term. And D, only record transactions involving cash. Which one is the correct answer? Tell me. You want to write it in the comment section? Which is the correct answer? Are you ready for the answer? Or you want me to repeat the question? The question says, the going concern assumption states that a business will be A, that will be A, profitable every year. B, continue to operate for the foreseeable future. C, be liquidated and sold in the near term. And D, only record transactions involving cash. The correct answer is continue to operate for the foreseeable future. The going concern assumption is that this company, the assumption is that the company is not going to liquidate. It is not going to be forced to liquidate, and it is not going to willingly be liquidated. So that is the assumption. So it's going to continue to operate in the foreseeable future. And by foreseeable future, we are talking of the next 12 months at least. So it's going to operate in the foreseeable future. Let's go to question number 3. Question number 3. Under the principle of conservatism, which is also called prudence, which of the following is true? A, expenses should be recognized only when cash is paid. B, gains should be recorded as soon as they are anticipated. C, assets and revenues should not be overstated, and liabilities and expenses should not be understated. D, all financial information, regardless of size, must be reported in detail. Which is the correct answer? Which one do you think? Is it A? Is it B? Is it C? Is it D? The correct answer under the conservatism or prudence principle is that assets and revenues should not be overstated, and liabilities and expenses should not be understated. So basically, we're saying that do not overstate your profit. Do not overstate your assets and income. And also when you have losses, anticipate them, but do not understate them. Don't understate them. Don't reduce your losses, okay? So try to recognize losses on time instead of understating them. Don't understate your losses, okay? So say liabilities and expenses should not be understated. Don't understate them. And also don't overstate your assets and revenues. In other words, we're saying don't doctor the accounts. Number 4, valuing inventory at the lower of cost and net realizable value. That is under IAS 2 inventory. Is a classic application of which concept? A, materiality. B, conservatism. C, going concern. D, matching principle. Which is the correct answer? Tell me. When you value inventory at the lower of cost and net realizable value in accordance with IAS 2 on inventory, what is it complying with? Which accounting concept is it complying with? Is it materiality? Is it conservatism? Is it going concern? Is it matching principle? Do you know the correct answer? Going, gone. The correct answer is conservatism. You are being cautious. You are being cautious. You are avoiding risk. You don't want to be careless. That is why we value inventory at the lower of cost and net realizable value. So when you do that, you are complying with conservatism. Now let's look at these true or false questions. The first one, the materiality concept means that all items, regardless of their size or importance, must be treated with the same level of strict accounting detail. Is this true or false? Is it true or is it false? Which will you take? Tell me, true or false? That is a false statement. It is false. The materiality concept does not mean that all items, regardless of their size or importance, must be treated with the same level of strict accounting detail. No, we're saying that only items that are material, and material means they should have the ability to influence the decision of the user. Those are the ones that we treat with strict accounting detail. But the ones that are inconsequential, that are immaterial, we don't treat them with the same level of strict accounting detail. That is the principle of materiality. So that answer is false. That statement is false. Let's look at the next one. True or false? If a company is expected to cease operations within the next 6 months, it can still be considered a going concern. Is that true or false? If you have not watched my video on going concern, where I explain all those accounting principles, go and watch it. It will benefit you. The answer here is false. A company is expected to cease operations within the next 6 months. That is no longer a going concern. You can't call that company a going concern anymore because it is expected to cease operations. So the going concern of that company has been challenged because we say foreseeable future, and foreseeable future, we're talking of 12 months. Good. So the answer, that statement is false. The last question, true or false? The conservatism principle encourages accountants to choose the solution that presents the least favorable financial outlook when significant uncertainties exist. Is this true or false? This is true. I'm sure you got it right. If you got it right, tell me in the comment section. I want to know. That means you are learning well. It means you are making improvement in your accountancy journey. You have lots of accounting stuff to learn from the Accounting and Finance Coach. So don't forget to give us a like, hit that thumbs up button, okay? And subscribe to this channel. This is how you can encourage us to demystify all the difficult accounting subjects and topics for you.